I'm Bernard and welcome to my course. It's a daily podcast and video that I do for my Substack called The Kaka. It's all about Aotearoa's political economy around housing, climate and poverty. I wanted to talk today about the quarterly survey of business opinion from the New Zealand Institute of Economic Research. This is the longest running business confidence survey that we have, and it's done every quarter. There's another one, not quite as old, the ANZ Business Outlook Survey, that's done monthly. But the QSBO is watched closely by everyone in business and certainly the Reserve Bank because of its long-running nature. And yesterday we got the numbers for the September quarter, and almost all of the replies came in before those very bad GDP figures. You might recall the 0.9% fall in GDP in the June quarter. And up until now, the early leading indicators have been mixed, but seem to have improved somewhat from the June quarter. Well, this QSBO survey was frankly dire. And I'm going to take you through the results and also look at the expectations now for the Reserve Bank with its decision later today. And here's the survey. You can see that the big old dive down there, 2023, 2024, and then a bounce back up. This is the measure of so-called domestic trading activity. Remember, there's a couple of things that this survey does. It asks, how do you feel about the wider economy? And how do you feel about your own business? Also, what's actually happened in your business in the last quarter? So it's quite a good measure, not just of general impressions, but actual experience. And it's a good leading indicator for what's happening in the economy, particularly the one around expectations for the next quarter. And domestic trading activity for the next quarter is pretty closely aligned to GDP. So there has been a bounce, but it remains below zero. And it shows that there is a real risk of that downturn in the June quarter extending. And a bunch of the economists commented yesterday that there's now a higher risk that we stall again in the September quarter, which has just finished. And the overall picture here is that the economy remains stuck in the mud. It's a quote from ANZ economist, and that's later today we're more than likely to get a 50 basis point cut rather than a 25 basis point cut. Other news today, I think it's worth noting, there's a poll that's come out from Horizon Research, reported in Stuff, that the pay equity reversal looks likely to shift about 160,000 votes, which would be enough to cost the government re-election next year if it was replicated. So here's the quote from Jane Turner at ASB. The economy may have turned a corner, but we are failing to gain traction to get out of this hole. The wheels are spinning in the mud. And just to give you some more detail about what's going on, in the last 3 months, a net 14% reported activity was down. Now that's actually an improvement from the previous quarter where 22% said their activity was down. So it's still a minus number. So obviously when you're a minus number, you're in contraction. It's just less contractionary for experienced activity. The outlook for the next 3 months for experienced activity, so how's your own business going to do? That shows a plus net 9% expecting improvement. That's down from a net 18% expecting improvement in the next quarter. Unfortunately, the outlook for jobs and for investment is also very weak. So the expectations are that from a minus 23%, i.e. 23% of those asked said they were likely to cut workers. Now that's up from 12% who said they'd cut last month. In the next 3 months, people are more confident. About 4% expect to increase employment. That compares with a 4% who expected to increase employment in the last 3 months. And investment intentions for plant and machinery, -13 from +8. So a real deterioration there, and it's a collapse for investment intentions for buildings, down to -20%. And one of the most interesting things about these surveys is how businesses feel about their own futures, how they feel about the wider economy, and what actually happens. Because you'd hope that businesses understand their own businesses well enough to know what's going to happen in the next quarter. But generally, that's true. So the chart there shows expected activity in the orange or the yellow, and the blue is the experience. So you'd expect that one would follow the other, and they generally do. However, when there is a national government, a bit of a gap opens up there. You expect a lot and you don't quite get as much as you expected. And that gap is the widest it's ever been in the last 6 to 12 months. And if you were to see a chart showing what people think about the rest of the economy versus what they expect about their own businesses, that gap widens even more. So what does this mean? The economists are now saying they expect the official cash rate to be cut by 50 basis points. Now, if you look at this chart, the crimson one is the Reserve Bank of New Zealand. They're the other central banks there. And you can see that the Reserve Bank of New Zealand started hiking before everyone else. It hiked more than just about everyone else, except the US Federal Reserve. It started cutting before everyone else, but is not expected to cut by as much as, for example, the European Central Bank or the Bank of Canada. And the RBA, the blue line, is currently actually above the, or just slightly above the New Zealand official cash rate. So just a few other things to watch out for today that I've put in today's email newsletter. The deep dive of the day, so a well-reported piece there from RNZ into what advocates for homeless teenagers in Auckland are saying about the decision to force unemployed teenagers to go home and to cut the benefit for them if their parents earn more than $65,000. According to Manaki Rangatahi, its CEO Bianca Johansson, she says this will see more rangatahi becoming homeless, and we don't have the infrastructure in this country to support them. That's one of the basic issues here. We keep inviting in lots of people, and we don't build before they come. The feature of the day, I just wanted to point to a piece that's in Stuff. This is a deeply reported interview with a jobless man named Robert Purchase from Auckland, who's applied for 8,000 jobs in the last 2 years. Problem for him, of course, is that 28 years ago he was convicted of an assault, and that's why he can't get a job. He's still positive and he's moving forward, but this is a good chance to again look at this issue of clean slate reform. The idea that if it's a relatively minor criminal offence, that it is taken off the records so that employers can see it 28 years later. The investigation of the day, I point you to Paula Penfold's piece, in which she's had a good look, along with Paddy Gower, at some of the issues around gambling, and has some particular stories about addiction to gambling. And these stories are awful. Now, in today's papers, we have in the New Zealand Herald, leading with Winston Peters having a crack at the Greens over the damage to his window, saying that the Greens encourage this. All political parties, including the Greens, have said that they opposed any violence or any of the breaking of windows. And you can see there that the New Zealand Herald in its business section leads with that poor business confidence survey. In the Post today, the lead is a scoop from Tom Hunt that Tory Whānau is going to unleash in her valedictory address. And a bit of a scoop here on ACC pulling back from its hybrid working provisions. Essentially, staff quite like to work from home. Interesting little piece from Tom Polistrica as well. I think following up on some stuff in the newsroom yesterday. Adrian Orr agreed to a non-disparagement clause in his exit agreement, which saw them being paid $416,000. In the press today, the closure of a festival, and also it looks like the mayoral race is going to be quite tight. For RNZ, they lead with a scoop today on the issue around ACC and the disputes resolution company. And an interesting piece from Susan Edmonds, looking at the number of people who are under the age of 65 but get the New Zealand Super. You would have thought that's not possible. Actually, you can if you are the partner, or you could if you were the partner of someone over the age of 65. It turns out there are 3 people under the age of 30 who get the New Zealand superannuation payment. Now, this was clawed back a few years ago, but because they couldn't retrospectively do it, turns out 3 years ago there were a few 20-year-olds who were married to 65-year-olds, and they're still in their 20s. Online today, good interview scoop there from Micah Sherman at One News about the issues with Te Pāti Māori, speaking to Marameno Kapakini about this accusation that Te Pāti Māori is a dictatorship, and again, leading with that business survey. Stuff, again, has these that story about pay equity and, of course, Robert Purchase, the jobless man. Newsroom has a couple of interesting pieces pointing out that one of the consequences of taking the dole off 18 and 19-year-olds, if their parents are earning more than 65,000, is it will make it easier for the government to get closer to its job seeker target. Remember, it wants to get the number of people on job seekers down. Well, this is one way to do it, to take it off 18 and 19-year-olds. And a bit of a scoop there from Fox Meyer about the issue around GMO livestock tests and this debate that's going on. Interesting little subplot there. New Zealand First, with the encouragement of its anti-vax, anti-mandate, pro-organics lobby, trying to stop GMO from going through. Spinoff has a very good piece from David Williams on the history of the Waitangi Tribunal. And Business Desk, again, looks at that potential rate cut today of 50 basis points. Again, it's all about the NZIER survey too at interest, and a very good cartoon from Guy Potty today about Winston Peters and Chloe Swarbrick. She may not enjoy it, and I suspect Winston doesn't enjoy it, but it is something to it. I'm Bernard Hickey. That was today's chorus for Wednesday, October the 8th. Ka kite anō.